Hi, I'm Max Keiser. Welcome to the Keiser Report. Who knows what evil lurks in the heart of the global financial system? The shadow knows. Yes, the shadow has the power to cloud men's minds, so they cannot see the shadow. Stacy.
Max Keiser, I am looking like a shadow today in honor of the shadow banking system. The shadow banking grows to $67 trillion industry, regulators say. The regulators are the Financial Stability Board, and they say it's $6 trillion more than they thought it was only a week or two ago.
Right, so you have a parallel universe. You have the global economy, then you have a kind of a Death Star that circles the globe, run by banksters, fraudsters, kleptocrats, who prey on the poor earthlings with their shadow derivatives and shadow banking system, and they commit all manner of fraud. It's totally unregulated in the shadow banking system. It's as big as the non-shadow banking system, and it's the primary source of the fraud that's destroying the global economy, and yet it's growing by leaps and bounds. That's the very definition of financial cancer.
It is where all fraud goes to hide. A lot of it is something like repurchase agreements. The Repo 105s that took down Lehman Brothers, they had $50 billion, for example, hidden in these Repo 105 repurchase agreements out there in the dark pools, the dark matter, which sucks in all of the real wealth, the real activity of our economy is sucked into this thing. So the FSB, a global financial policy group comprised of regulators and central bankers, found that shadow banking grew by $41 trillion between 2002 and 2011. The share of activity based in the U.S. has declined from 44% in 2005 to 35% in 2011, moving to the UK and the rest of Europe. So as you see, there was a mammoth growth in it since 2002.
Right, moving to the UK. When David Cameron wants to defend the City of London, he wants to defend the shadow banking system that has its headquarters here in London. And you mentioned the Lehman Brothers Repo 105 scam. Just briefly, for people to understand what that means, is that at the end of the quarter, when they're supposed to report to regulators their balance sheet, the liabilities and assets that they have, they will temporarily put all the liabilities, they'll park them in the shadow banking system. They won't report the liabilities, therefore making their profits look greater than they are. And then when the regulators move on to the next company, they download the liabilities once again, and they do this on a quarter-by-quarter basis. This is done by all the Fortune 1000 companies. They're engaged in massive accounting fraud using the shadow banking system to cook their books, commit. You know, these four remaining big accounting firms are involved day in and day out with massive accounting fraud. They're just as guilty as Lehman Brothers in financial terrorism, the Deloitte and Touche, the KPMG. They're just as guilty as the rating agencies in financial terrorism.
We're actually going to move on to them in the next story, but
Excellent.
at this point, I want to cover this shadow banking system, because remember, the shadow of the movie had the power to cloud men's minds so they cannot see him. And this is what I think the shadow banking system does. It cons people into not being able to see the fraud, to see the theft, because a lot of it is about theft, about transferring the mirror image, real economy, where every Joe Bag of Donuts and Joe Schmo are working. They're transferring the wealth to this unaccountable, unknowable, dark matter out there. Now, the size of the shadow banking system includes the activities of money market funds, monoline insurers, and off-balance sheet investment vehicles. Supervisors consider shadow banking activities to be those that allow banks to carry out business off balance sheets, as well as those which allow investors to bypass lenders and the functions they traditionally fulfill on the markets.
So you have an area that is, I guess, you know, if you're driving down the highway in cities around the world, if you pull off an exit ramp, you'll find a lot of prostitution going on, a lot of murder for hire, and that's kind of going on in the shadow banking system. So in HSBC, Barclays, Lloyds, when they want to kill a company, they want to do a massive fraudulent deal, like, I don't know if you're going to be talking about the HP deal at some point. There's an $8 billion fraud that was conducted in the shadow banking system with the help of an accounting, a big four accounting firm. So once again, and when these banks need to be bailed out, they turn to the government to impose austerity measures. So that's the chain of action there.
Now let's go back to this shadow banking system that we're talking about here, because earlier I did tell you about this and you said, well, it's not a shadow, it is the banking system. So it's wrong to call it the shadow, that in fact it is our banking system now, and that is the size of the banking system. So to say, to cloud people's minds, to say, oh, it's a shadow banking system. It's just a reflection of what we are here today. This banking system here that you can see, the little shops out front, that's our banking system. But so they're calling it a separate thing. All of this fraud, all of this derivatives, all this highly leveraged craziness, it's all out there, and that's a shadow. But you said to me earlier that you thought that this was actually the shadow, the real banking system.
Well, right. So the banking system, inclusive of the so-called shadow banking system, that means that you've got financial fraud comprising not just 10 or 20% of the overall GDP, but the shadow banking system, that's 50%. Because that's the total GDP of the world, you have to include the 67 trillion. So the total GDP of the world is not 69 trillion or 70 trillion, it's including the shadow banking system, it's 140 trillion. So 50% of that is financial fraud. Then of the remaining 69 trillion that is counted in the non-shadow system, 50% of that or more is fraud as well. So you've got 75 to 80% of the global GDP is controlled by shysters and charlatans and banking terrorists in the City of London and in Wall Street and around the world. No wonder the economy is collapsing, the environment's collapsing, there's war perpetually in countries all over the world, and austerity is causing massive suicide rate and financial hardship because 80% of the global GDP is fraud.
So now we mentioned repurchase agreements, and they go on a little bit further into this. And they say that repurchase agreements are contracts where one investor agrees to sell a security and then buy it back at a future date and a fixed price. So as we saw with the Lehman Brothers collapse, what they found was that they had basically overnight, when the regulators came to look at their books, when the auditors came to look at their books, of course, there was a giant black hole of debt. So they sold that debt overnight for that day that they were being audited, put it into this shadow banking system, and then it magically disappeared. They looked healthy. So the fact is, we don't know, JP Morgan celebrates record earnings. Is that because all their record debts are off in this shadow banking system?
Well, the cost of actually having cash on the books is prohibitive for financial terrorists like a JP Morgan. So they outsource their cash operations to the repo market. Essentially, is that why the repo market exists, is so that banks and corporations can outsource their whole cash management function into this thing called the repo market, which allows them to gain negative rates of interest on their cash, where they're making money. The more money they borrow, the more money they make on the borrowing that they do. It's the complete opposite of what everyone else in the world has the experience of borrowing money and being charged an interest. If you're a banking terrorist in the City of London, you borrow money, you get paid to borrow money. So, of course, they're going to be well capitalized because they're being paid to commit financial fraud from Osborne, Cameron, Obama, the whole lot.
Well, the Financial Stability Board, finally on this story, is very concerned about the systemic risk that this black hole of debt out there and this black shadow banking system is causing. And I think they're attempting to say we need to regulate it in some way, but I feel like that's like NASA trying to say, well, there are these dangerous black holes out there, so we're going to send some astronauts to the event horizon and try to fix it.
Look, the financing of this shadow banking system, 69, 70, 80, 100 trillion, it's actually closer to 150 trillion if you include, really inclusive of all of the double accounting and triple accounting. The financing of this is due to, and with the help of 0% interest rates. That people say, well, it's great, interest rates are zero. But they never take into consideration that for interest rates to be zero, bond prices have to be trading at, well, let's see, in America, they're trading at a 240-year high. In Britain, they're trading at a 300-year high. Is that a bubble? Well, is it like a tulip bulb that went from 1 to 1,000 and then back to zero? Is it like the Mississippi Company where the stock went from 500 to 18,000 to zero? Yeah, it is. It's a multi-hundred-year incredible bubble that's ready to pop. Interest rates go to 20% and people are going to be absolutely decimated. It could be prevented. But of course, you don't have anything to get in the way of this freight train of fraud and financial holocaust. Let's call it what it is.
So to cover up all this fraud that is out there in the shadow banking system, of course, we've seen lots of printing of quantitative easing, printing money, printing new debt in order to cover up all of the fraud. So back in episode 336, we referred to Mitt Romney, who had bankrupted essentially a company and held the FDIC, the Federal Deposit Insurance Corporation in America, basically held them hostage, forced them to give him more money to eat $10 million in bad debt. Because what the FDIC found is if they seized the assets of this company that Mitt Romney had basically hollowed out and taken away, is that all that was left was an HP printer. So we referred to HP, which has restated $8.8 billion, a charge of $8.8 billion on their purchase of this British company, Autonomy. So I want to flash back to just September 4th when you talked about the HP printer and its role in the U.S. economy.
Yeah, well, I mean, that's all J.P. Morgan has. They have a negative net worth of hundreds of billions of dollars. That's all the Federal Reserve have. All the kerfuffle about auditing the Federal Reserve is that when they open the vault and say, oh, where's our money, they're going to find a printer. When they open up Fort Knox and say, where's our gold, they're going to find a printer. Over there, Lloyd Blank finds J.P. Morgan / Goldman Sachs. They open up the vault and they say, oh, all we have is a printer. ECB, nothing but a printer. It's amazing that the company that makes printers, Hewlett Packard's doing so poorly, considering the only thing that any of these companies have as a tangible asset is a printer. This is amazing. Even the printer company is going out of business because of too much printing. The HP deal, with Autonomy, a perfect example. Even Larry Ellison over at Oracle, when the deal was going down, said this is a fraud. It's an $8 billion fraud. It was signed off by the accounting firm. Remember, accounting firm, rating agencies, investment banks, regulators, terrorists. Biggest terrorists in the world. These accounting firms need to be severely punished.
Now, as you said, Deloitte looked at the books of Autonomy and said to HP, yeah, it's fine to buy it for $11 billion. Well, looking back to another headline, Max, a short seller saw Autonomy's problems. This is Jim Chanos. And while alleged fraud at Autonomy may have been a surprise to Hewlett Packard, its auditors, its bankers, and its executives, it wasn't to short seller Jim Chanos, who in July 2011, Max, wrote a report saying this was his biggest European short, which was Autonomy. And he noticed that Autonomy claims about the size of its e-discovery business are questionable and represent 40% of total market share in an industry with more capable and better capitalized competitors like Microsoft. Autonomy's claims of 20% growth in revenue are inconsistent with competitors' reported figures. So they wrote a report prior to Deloitte, and also KPMG looked at it, and PricewaterhouseCoopers also looked at this deal, and they all found it was fine.
Of course, insider trading, hedge funds, shadow banking system, accounting firms, all committing massive collusion and fraud. The austerity is a response because there's no leadership, there's no government. Let the global insurrection against banker occupation continue. Let 1 billion people in the streets with torches hunt down these bankers and do what they have to do to get rid of this scourge. All right, Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Stay tuned for the second half of the show. I'll be talking to Jan Skoyles of the Real Asset Company. Hi, I'm Max Keiser. Welcome back to the Keiser Report. Time now to turn to Jan Skoyles of the Real Asset Company, where she writes the daily nugget research and commentary. Jan, welcome back to the Keiser Report.
Thank you for having me. How are you?
Oh, fantastic. Now, Jan, your clients are moving their gold from Switzerland to Singapore. You have a unique position over there at the Real Asset Company. You can see the flow of orders. Now, why is Switzerland, and is it still a safe place to store your gold?
Well, first of all, let's backtrack slightly. We did a survey asking our clients and our readers where they would like to see their gold stored if they had the choice. And we gave them a series of options, of which 2 of them were Switzerland and Singapore. There's also Hong Kong, the UK and US. And we, I personally had expected to see Switzerland take the majority, and instead Singapore did. Not by a huge amount, but and Switzerland was still very popular, particularly with European customers. But Singapore was right up there and chosen by our American readers and clients. And I think this maybe doesn't show a dramatic shift yet, but it certainly shows that there's sort of changes in the water, with people thinking, maybe questioning if Switzerland really is this safe haven that we've all perceived it to be, and instead they're kind of looking towards Singapore. And I don't think, I certainly wouldn't agree that Switzerland is a dangerous place to be keeping your gold anymore. But certainly in the last few years, there's been quite a few changes and a few moves by Swiss banks and to do with the American government, which have made people question whether or not the Banking Act, which came into place, I think, in 1934, is still as strong, as it was. And if those...
Right. Let me cut in for a second. So, in other words, the scandals in Switzerland.
Yeah, okay, yeah.
And the banks have now opened the kimono, so to speak, and American regulators are looking into the Swiss bank accounts. So it appears as though this has scared away a lot of folks who are not thinking Singapore might be a little bit more friendly to those who are seriously wealthy and don't want the prying eyes of foreign governments.
Well, I think basically to investors that want to have a bit of respect paid to them and feel that it's not really a huge amount of the government's business what they're up to. And Singapore, have this amazing free port facility where there's no customs and there's no sort of there's no tax. It's the GST, which was a 7% tax on gold and silver, has now been removed as of October. And as a result, the free port facility has been extended by, I think, 50,000 square meters because of this huge demand that they're seeing.
Well, let's talk about this trend of wealthy people are adding to their gold and silver positions. It seems from the evidence that we have that they're doing so pretty aggressively. But now so too are the big hedge funds like a George Soros, who's been in and out of gold. He just now is back in a very big way. John Paulson, another hedge fund who's big in gold. The central banks since 2009 have been net buyers of gold, increasing their positions radically. At the same time, Jan Skoyles, we have people who are buying bonds. So there's a fear trade going on. The people are afraid of the global financial catastrophe, and they're buying gold. That makes sense. But they're also buying bonds at 300-year highs here in the UK or 240-year highs in America. Something's got to give there, right? They can't both go up in this fear trade, or am I missing something?
I don't know if you are missing something. I don't think they can both keep going up, but I think one's to do with short term and one's to do with long term. And people are buying gold because it's a hedge against the kind of the currencies which are backing, all these countries and everything. And they're going into those because they're hoping it's going up, but then maybe it sort of drops slightly and they're selling off for profits. There's two different things going on, and there's two different types of investors going for these things. So gold is going up, but it's going up slowly, and they may be investing in bonds because it's sort of it's a short-term approach.
But that is not making a lot of sense.
Sorry.
It's quite all right, but I understand what you're trying to say there, that there's a lot of trading going in and out of bonds. However, the trend out of equities into bonds in places like pension funds, where it's longer term money, is enormous. And yet, again, the bonds are trading at multi-hundred-year highs. It would, by any definition, be in a massive bubble, government bonds around the world. So are these bond investors asking for trouble? And are the gold investors trying to tell the bond investors, if the smartest money in the world is buying gold because of inflation, essentially, that's going to be rearing its ugly head, shouldn't the bond buyers look over at the smart people and think, well, maybe they know something, that maybe I shouldn't be buying bonds?
Well, I feel like that, and I wrote something the other day about China, saying that they're all kind of investing in gold and buying gold, and the government encouraging gold. And us over here in the West are going, have you seen this? Do you see what's going on? People are buying gold, and I just think that gold's still sort of seen as it's old-fashioned, it's irrational pessimism to be going for it. And I think we talked about this before, that the bond market is still doing well because governments still have the ability to be printing their own money, and so people are feeling confident in their government still, particularly in the West. And I think maybe they're not taking enough of a long-term view on it. But I think it's you're right. It's heavily overinflating everything. But gold is just. It's just not in that psyche at the moment.
All right, so keeping in this global, theme of what's happening in the global bond market, how China is obviously buying a lot of gold, and a lot of it's going through Hong Kong, and we see hundreds of tons going through Hong Kong. China, again, here's a country with huge reserves of paper money, $3 trillion in paper, but who's very aggressively buying gold. Are people, A, storing gold in China, B, again, is China onto something in terms of what they see in the future? And so what are your thoughts there?
Well, I think the China thing really does fascinate me, because I think, during the US elections, a lot of people, in particular, well, as I say, a lot of people, Obama and Romney were both shouting about this currency manipulation, which we're seeing by the US, because they're the largest holders of, US debt. But if you look in June 2011, which was when China were given computer access to buy US treasuries directly, at the same time, they actually pretty much slowed down on their buying. And now there's an interesting convergence between Japanese and Chinese holding of US treasuries. And pretty soon, it looks like Japan will soon be the largest holder of US debt. So China are actually slowing down, if not backing off on their holder of US debt. But at the same time, we see that they are, last year they were accounted for 21% of global gold demand. So they're upping their gold reserves, and people are personally buying and investing in gold. And we see huge measures coming out from the government which are facilitating the ownership of gold, and banks they're now allowing further import permits, permits to
you
import
can redo
bonds.
that. So just say, pick it up from, and banks are allowing.
And the government is now working to allow banks to, import more gold. They're looking at issuing more permits to enable them to do this.
Why is the government doing that?
Well, I think I have a personal theory which sounds quite naive and quite simplistic, but it's an interesting way of looking at it, in that China have approached growth in a fairly kind of Keynesian way, in neoclassical way. And they've created a huge amount of money in order to promote this growth. And at the same time, we've seen a huge amount of wealth come into individuals. We've seen a huge amount of development. A lot of it was through cheap exports, which is by keeping the currency low, buying these US treasuries. And now they're seeing this wealth, and it's like, okay, rather than reinvest that into the stuff that made us, let's reinvest it into gold, which will guarantee our wealth and secure our wealth for the future. I think that's why they're encouraging it, and it's almost like they're a few steps behind the Western world, and they've watched what's going on, and they know, China has one of the oldest memories of the damages of paper money, and I think they're onto it, and they know what's going on, and so they're encouraging people to invest in gold, and they're also, the government are keeping gold. There's discussions about whether or not they now have, they're looking to back the currency with gold, which is one debate. And then also, of course, everyone's talking about how they want to remove the dollar from being the world reserve currency.
Let me jump in. So those are two extraordinary things you're saying there. Number one, they're talking about a gold-backed currency in China, which would be the first country to do so in quite a number of years. And this would obviously set off a bit of a global firestorm, would it not? Because suddenly you'd have one currency that was actually backed by hard metal, and as you point out, it would totally take pressure and interest away from the U.S. dollar. So you'd have a total shift. Let me ask you this question. I'm going to put on your prognosticator's hat for a second. I apologize if I'm sabotaging you with this question, but China currently, according to the surveys, has about 1,050 tons of gold. Mm-hmm. They've been accumulating massive positions surreptitiously and overtly. They're the biggest gold miner in the world. At some point, they're going to have to announce their revised position in the gold holdings and in reserves. Some are saying they're going to come out and say, we jumped to 2,000 tons. Some people say 3,000 tons. Can you give us, obviously this is a guess, but what are your thoughts there?
On how many tons have been accumulating, or when I think they're going to announce, or what impact?
Yeah, both of those.
In terms of how much they're accumulating, a bit like I think we read so many different numbers every day. I read 2,000, but the other day I heard 6,000 tons have been accumulated.
What?
I know, exactly.
What?
Just a huge amount.
6,000 tons?
Yeah, so then there'd be the second.
Jan Skoyles, that's breaking news.
Well, it's not quite, because I only read it and I can't even remember who said it.
Okay, all right.
But I definitely can, but no, it's all pure speculation, like you just said. And I think the impact that would have is, obviously would be dramatic, but this sounds quite unprofessional to say, but who cares? Because it would be interesting to see what happens, and it will make the rest of the world wake up and think, crap, what's going on? We've all been a bit of a dingbat here, and we should be paying attention to what they've been doing.
That's a technical term, from what I understand. They wake up and say, crap. Certainly dollar holders
Dollar holders.
would
yeah.
certainly wake up with that on their lips.
Yeah,
As they
exactly.
realize that their dollars are now approaching worthlessness on the event horizon known as the China takeover of the global economy. Now, we only have about 30 seconds left. I want to get your take on the news that just broke October 22nd, that during the 2000-2001 period, Germany asked Britain for 900 tons of gold. And this, in fact, is what triggered Gordon Brown to dump 400 tons on the open market at a 20-year low price, because they apparently had sold or leased out Germany's gold, and they needed to manipulate the price down in order to buy it back to then deliver the gold to Germany. This is pretty shocking news.
I think it is shocking news, but when I read it, yes, it is shocking. But at the same time, I thought, well, I mean, just look at what terrible decisions Gordon Brown made to do with the whole thing. And so I wasn't really particularly surprised by it. And I think we were just waiting for a story like that anyway, because if you're going to store your gold in another country, you can't be surprised when things like that happen nowadays with the currencies going the way that they are.
Fair enough. All right, Jan Skoyles, thanks so much for being on the Keiser Report.
Thank you.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Jan Skoyles of the Real Asset Company. If you'd like to send me an email, please do so at keiserreport@rttv.ru. Until next time, Max Keiser saying bye, y'all.